Okay, so welcome to Financial Accounting, once again with Samuel Ibanda. This is just to help you prepare for the Certified Public Accountants exam, paper 1, okay? So we want to just have a simple snapshot. I usually want to start using the syllabus. Each of my sessions, I want at least to hint something on the syllabus because the syllabus gives us the direction to which we should take, okay, on certain topics, on certain ideas, because this is what the examiner exactly uses to set the exam. So for students that are preparing for the exam, that is just a not far away from now, yours is to make sure that you're ticking yourself on each topic that is within here, as well as the learning outcomes, okay? This might be a little general, but once you get down in terms of the examination, detailed syllabus, you'll be able to see several kind of things, and you'll be able to compare notes with what you have in literature, what you have in terms of the videos, and what you have in terms of maybe what you've tried out in terms of past paper questions, okay? Yeah, so very important for us to have that in mind. So last time we had a session and we had certain kind of topics that some of you had indicated that you still had challenges into. And we wanted to try to see if we could cover them as we close off this, okay? We have very few classes, okay, that are remaining for us to close off this. But like I usually say, we have several kind of videos that we have done that you should be looking at right now, even as you do your self-study, okay? So when you put in your extra time, the videos can help you to at least go through. For you, just create your study plan, and the study plan should be able to at least take into consideration nearly all that you have, okay? Yeah, so there are some questions that came through from the WhatsApp group. So we have a WhatsApp group where we share questions, and then people are also able to ask, okay? So there's a question that was shared by Rosemary, okay? And Rosemary was asking she was saying that question, especially additional question 1, maybe to help others. Let me try to see if I can share this question here so that we can all see it, and I can just interpret it very fast, and then we can move on to something. I usually love to have some of these questions so that we can be able to leverage onto them as we even study, okay? Yeah, in case you have any question around financial accounting, as I try to open the question, make sure that you can also try to ask, okay? And I'll be able to answer. All right, so that is the question, and I hope you can see it from the screen. That question was shared by Rosemary. Rosemary, well done. And I can see you're trying out these questions. Yes, make those papers dirty as you can see right there. So this question is in March 2021, okay? This question is in March 2021, and it goes ahead to give you different kind of information And then it gives you also additional information. Let me just try to see if we can find the actual question. I think it's right here. Let's just look at the actual question itself, not the picture, so that we can see exactly what it entails, that in terms of what is it requiring. So when you get down of this question, it asks you for adjusted profit, it asks you for a statement of changes in equity, and then it asks you for a statement of financial position. So Rosemary's question is not on the overall question. Of course, this is a trial balance, which trial balance is really very familiar to most of us. At least most of us know how a trial balance looks like and also can be able to interpret, okay? So we have the additional information one, which Rosemary needs some support. Okay, they say additional information. They say the senior accountant of Kirungi Limited was on leave. The assistant accountant determined the net profit, which is reflected in the trial balance, but had not taken into consideration the following information. So it says that the amount of inventory as at 31st December 2020 was shillings 45,507,000, which was used in determining the cost of sales. They're telling us that further information revealed that part of the inventory that had cost 6.7 had a net realizable value of 4.5. So ideally, we need to make sure we get the adjusted net profit. In getting the adjusted net profit means that we have to understand how to account for each of these additional information. So we have this additional information that is on inventory, okay? So inventory is regulated by the accounting standard 2 inventory, okay? IS 2 is one that regulates inventory. And the key principle or what it states is that we should measure inventory at the lower of cost or the net realizable value. The lower of cost or the net realizable value. So ideally, inventory should be valued at the lower of this 6.7 and 4.5. So if they are telling us that included in the 45,507, there is a 6.7, which is supposed to has a net realizable value of 4.5, it means that when you compare the 6.7 and 4.5, they should have valued this inventory at 4.5 instead of the 6.7. Okay. So what you basically do is you just try to do something small to adjust that. So I'll just try to demonstrate something to you so that you can be able to know what to do in such a scenario and how to account for that. So our inventory value is this, okay? This is the inventory at that 31st December. Let's try to copy this. So this is the inventory as at 31st December. This is our inventory right there, okay? Now, this inventory includes a certain inventory that is not supposed, that is of 6.7, okay? So there's inventory of 6.7 cost that has fallen to 4.5 net realizable value, okay? So what you basically do is you now make the adjustment, okay? Call it the adjustment. So we shall add back, basically, like this is inventory, and they're telling us that part of it includes inventory worthy 6.7. It had the cost of, but now the net realizable value is 4.5. So from the principle of us valuing inventory at the lower of cost and net realizable value means that we have to do what? We have to make sure that we value this inventory at 4.5 instead of 6.7. So what I'm going to do, I'm going to remove I'm going to deduct 6.7 from here, that inventory, and now add 4.5. So what that means is that I've basically removed what had valued my inventory at 6.7, so that I now may adjust it and now add the right figure, which is the 4.5 of that inventory. Basically, that is what I'll basically do. So I'll just come here. Let me first less. So less the cost of inventory of the 6.7. So this will be just minus 700,000. Okay. And now I'm going to add back the net realizable value. Realizable value of the 4.5, which is 4,500. Just try to do like this. Yeah, 4.5. So new, or you can call it the adjusted inventory at 31st December 2020 is actually saying this. Of course, we are lessing this. So I'll just do, since it already has a negative, I'll just do that plus negative that, and then plus this. So this will be your closing inventory value with, after you've taken into consideration the what? The adjustment at hand. Now, that is not what the question is looking out for, okay? I just needed to demonstrate that for you. Now, this question has something to do with an adjustment of profit. So ours is to ask ourselves, how does this aspect affect the profit at hand? Okay, how does this aspect affect the profit at hand? Now, when you look through the books here, this is the retained profit and this is the net profit. So this was the net profit. Okay, so if I'm trying to look at, let's say, adjustment of profit, and maybe this is now my attempt. Okay, maybe let me even put it here. So question 2, part A of the question, which I'm going to do as my they call it adjusting profit or adjusted profit. Okay, so I have what I'm starting with. So this is what I'm starting with, the net profit brought down. Okay, this is my net profit brought down from the information I've been given. So I have to make sure I adjust this profit with the adjustment that I'm making here. Okay, now for us to get this net profit, yours is now to get, again, try to rethink it backwards. How do we generate this profit? Okay, we know very well that when we are generating profit, ours is to look at sales less cost of sales. Okay, and under cost of sales, we have the opening stock. We have the opening stock. We have the add purchases. Then we have the less closing stock. Okay. So I'm just trying to give you an insight. And then from there, once you get your cost of sales, you get your gross profit. And the gross profit, you less your operating expenses. And then you come to your net profit finally. So when you're trying to look at this, all you're trying to find out is, how does this affect, how does me posting a wrong figure for my inventory, how does that affect my profit? Okay. So now, one of the things that I want you to know is that the higher the opening stock, the higher the cost of sales, and the lower the gross profit, and the lower the net profit. Okay, the higher the opening stock, the higher the opening stock, the higher the cost of sales, the lower the gross profit, the lower the net profit. Now, closing inventory works in the opposite way. Okay, the higher the cost of sales, the higher the closing stock, the lower the cost of sales. Okay, because remember, opening stock add purchases. So if you're listing something less, it means that if you're listing something higher in terms of closing stock, it means that you have a lower cost of sales. And having a lower cost of sales means that you have a lower gross profit, because gross profit is sales minus cost of sales. So it means that in this case, you're actually listing something that is a little lower. So you have a higher gross profit, and then the net profit also replicate the same thing. Okay, so that is what happens. Now in this case, because we actually used a higher cost of sales, okay, we used a higher cost of sales instead of the 43, which is lower. So it means that in that way, we used a higher cost of, we used a higher closing stock, okay? So this higher closing stock gave us a lower cost of sale, okay? Which gave us a higher gross profit and a higher net profit. So it means that this profit is overstated because of this closing stock, okay? You should be able to relate. The profit is overstated because of this, and this overstatement is just the difference between what we considered and what we should have considered. Okay, what we considered and what we should have considered. So in terms of difference between the two figures, okay, between the difference, this and this gives us a 2.2. So it means that our profit has to be adjusted by 2.2, and this 2.2 has to be less of our profit. Okay, so I'll just say less adjustment in profit in closing stock. Somebody wants to ask a question here. Oh, somebody says, I'm failing to understand. Can you repeat for me? Okay, let me repeat. This is how we derive profit. Okay, that is how we derive profit. We start with the sales, we less cost of sales. Now, the cost of sales is also opening stock plus purchases less closing stock. And then after we've gotten our sales and less our cost of sales, okay, if these are our, let's say, sales, let me put my sales here. Those are our sales, and now we have less cost of sales, have our purchases, then we have less closing stock, then we'll have our cost of sales here, okay, being less. Then we'll have our gross profit, then we have our expenses there, and then we have our net profit or net loss. So what I was trying to say is that I'm trying to look at the impact of closing stock on my profit. And what I'm saying is that because closing stock is used in getting cost of sales, okay, I'm saying that if my cost of sale, my closing stock is high, if my closing stock is high, it means that I'll have a lower cost of sales. Remember, cost of sales, it's opening stock, add the purchases, less closing stock. So every time I'm lessing something that is high, it means that my result will be a low value, okay? It means that my result will be a low value. I hope you get that. Do we get the principle? If my closing stock is high, it means that I'll have a lower cost of sales. And that lower cost of sales, if subtracted from my sales, it will give me a higher gross profit. And if I have a higher gross profit less the normal expenses, I'll get a higher net profit. That is if my cost of my closing stock was high. Now let's look at it from the other perspective. If my closing stock was low, it means that opening stock add purchases, I'm going to remove just a small thing. It means that I'll have a higher cost of sales. And having a higher cost of sales means that if this is subtracted from the sales, I'll actually get a kind of lower gross profit, because the cost of sales is high. Being less from sales gives me a lower gross profit. And that a lower gross profit also translates into a lower net profit on assumption that operating expenses remain the same, okay? Everything remains the same apart from what I'm just trying to change. So I was saying that in this case, where suppose we used the 45,507 instead of 43,307. And the reason why we use this is because we didn't take into consideration the valuation of inventory, which valuation of inventory says that we should value inventory at the lower of cost and the net realizable value. So when you compare this inventory that was valued at 6.7 and you compare it with 4.5, you realize that we should have valued this inventory at 4.5. So that is why I did this. I got my inventory, total inventory value, removed the overstatement of valuing it at 6.7, and now I added 4.5 to make sure that my inventory, this specific class of inventory is at 4.5, and it got me to 43,307. So when you compare what we valued compared to what we should have valued, we have a difference of 2.2. So we've overvalued our inventory compared to what we should have valued it. So this means that if this was a 2.2, and we have seen how having a higher inventory value affects our profit, we have said that if we have a higher closing stock, it means that we'll have a lower cost of sales, and that will depict into a higher gross profit and a higher net profit. So this net profit is higher compared to what it should be because of the adjustment in closing stock. So for me to bring it down, I have to make sure I adjust it with the closing stock value. So this adjusted profit from my trial balance here was actually 907 million. So these are thousands. So I'll just try to include a thousands here. So this is shillings, a thousands. So that is what I basically have. So if I'm trying to make the adjustment of this profit, this is 2.2. I'll just come and put 2,200. This is 2,200, and this will be a less. I'm basically lessing this from this profit. So the adjustment is in a negative to my profit. Okay, so I hope you get the principle. And I'm going to do that for each of the additional information that have been provided to me. Whatever has been provided to me here is the same principle that I'm also going to be able to do. We actually did this question, and I would encourage you to look out for the recording. I must have shared this question. So look out for the recording and go through it so that you can basically understand how to approach it, okay? Yeah, so we have that. In case you don't have the recording, you can always check out with me. Then I can cross-check, but I'm very convinced that we did this question. It looks very familiar to me. So I hope, Rita, that is a bit better than earlier on, okay? So I just felt I should answer that to what had been asked. Then I also asked if we have any questions that you have come across that you may want to ask. In the last class, we looked at, was it manufacturing accounts? I think so. Okay. And I asked you to do certain kind of questions. So I hope you tried to go through some of those questions as well. Any question you have about financial accounting, you can unmute or use the chat box. This is an opportunity for you. Either you're part of the class or you're just a new guest. Okay. I usually give this opportunity to my students to be able to ask any questions around. Okay, someone says, thanks, you have answered me well. Okay, thank you. Be glad I've answered you well. Please, Kale, unmute and ask.
Okay, Coach Samuel, good evening to you, and thanks for the good work of tutoring people in this paper. So I would like to make an inquiry. I would like to know whether I can use, I used to have a BPP study kit, the soft copy of 2018, but it is for ACCA. I don't know whether I can rely on it during my reading time to supplement on the additional notes that I get elsewhere. I don't know whether it is in conformance with the notes of the Ugandan ICPAU. Thanks.
Okay, you're welcome. Yeah, so Kale, what I can basically comment on that is that when you're studying, when you're using any literature in terms of notes, use it vis-a-vis the syllabus. So for example, if I'm trying to look at, for example, let me say, if I'm trying to look out for a topic, maybe on manufacturing accounts, preparation of financial statements of manufacturing accounts. If I go to the ACCA book, I should be able to find very similar information. We also, I think I've actually shared, was that 2018 or was which year was it?
I have a 2010 copy, but someone told me it's obsolete now, so I should look for the 2018 copy.
Interesting. Yes, I think, and I think you must have gotten it because I shared that. And for me, I have standard notes for my students, but I just shared that to supplement. Now, other than other papers like maybe financial reporting and so on, financial accounting does not really change. These are principles, okay? These are really principles. I first studied financial accounting when I was in senior 2. And I want to tell you the same balance sheet we studied is the same balance sheet we study in financial accounting here. And those are several years back again, okay? So I want to tell you that for you to easily study, this is, for example, if I want to search about manufacturing accounts, I'll just come here and put F and then put in manufacturing accounts. And it will be able to give me different results, okay? I need to be able to look out for the topic that actually speaks about manufacturing accounts. Let me just try. Hope I use the right spelling. Okay, this is manufacturing. If you can find the BPP that is recent, well and good. But if you cannot find it, you can still leverage on these two. Now, for example, this is cost of goods sold. Let me try to see if this is the manufacturing accounts document. This is inventory. So when you look at this inventory and compare it with the syllabus, you still be able to get something similar. Okay. So you should be able to look for it. I'm not trying to see it, but if it is part of this, let me see, sole traders, basic financial statements, incomplete records, partnerships, for companies. Okay, this is for companies. I don't know if they speak of manufacturing accounts here, but may not really be here. But if it was, let's say, inventory, if I'm looking, for example, bank reconciliation, bank reconciliation, you'll be able to find text, okay, about bank reconciliation. Now, as I think you can see, it's on this chapter. You'll be able to find some notes, but like, you should not use it as your 100% basically. Okay, supplement, because some of these notes are a bit scanty in terms of, okay, they are not so much detailed. Okay, they are not so much detailed. So yours is to, for example, if this is bank reconciliation, as you can see, it's much detailed, and in this information, there is no information that I can say it's obsolete. Okay, this is information that exists, and you know what changes in financial accounting are basically the standards, which we don't so much go into detail when we are studying this paper. This paper is about the principles, so you can be able to use that, but also find more notes. Okay, at least I've tried to do that for my students. Find more notes and use this. For example, this is bank reconciliation. I just want to show you. So this is the bank reconciliation part, and as you can see, bank statement versus cash book balance. You'll be able to find very similar text when it comes to this information. If you can find a latest version, well and good. Now, isn't this the bank statement and cash book, which is really what the examiner basically has here? So that shouldn't really worry you very much. Okay, it shouldn't really worry you very much. Find notes that you can supplement, and this should be your guide. If there's anything that is here that is not in that PPP, look for another source. Okay, look for another source, and that will be able to help you. Okay, so I just wanted to comment on that. All right, anyone else with another question? Somebody says, I need support around correction of errors. Rita, I would love you to unmute and ask what exactly you need support on when it comes to correction of errors. Now, friends, there are those that have joined it with this as maybe you've joined in for class. We have already recorded sessions, so I just felt I should first answer some of the questions here. Make sure you get all the recordings we have done in the past. There are several of them. I think they have now come to over 20 plus, so they can help you. Rita, could you unmute and tell me what your challenge on correction of errors is? Rita, Sheila, are you there? Okay, if Sheila can't speak, anyone else with another question as we wait for Sheila to come through, you can unmute and ask any question, any challenge you found during your study in this paper, or any guidance you would need from me. You could just unmute and ask. So you guys are 100% ready for the paper. You have no challenge. Rita, are you there? So you can ask, then you can proceed on to something. Rita, Sheila is not hearing me. I don't know if it's me who is not being heard by other people, but that is fine. That's okay. So I'm unable to unmute myself now. Okay, that is understandable, Rita. That's fine. That's okay. Okay. Yeah, but when it comes to, she says basically the suspense bit of it, errors are continuously appearing in different papers. Now, the whole aspect of errors, you need to understand the errors themselves in detail. Okay, what are the errors so that you can be able to correct these errors. Let me see if this syllabus has a suspense account. Okay, correction of errors here. So she says this, the suspense bit of it. Now, why do we have a suspense account in the first place? A suspense account is held for two reasons. One of the reasons why a suspense account is held in scenarios where we cannot tell the alternative account. Now, financial accounting follows a double entry principle, which says that for every transaction, there should be both a debit and a credit effect. For every transaction, okay? For every transaction, you should have a debit and a credit. Now, there are situations where some of you are not very experienced with these things, and you might have a scenario where you have to only debit and you can't tell what to credit at that point in time. So the suspense account comes to your rescue, and that is what we basically use to record. Now, the suspense account is a temporary account which you should not hold within your books forever. You just use it temporarily. So you credit or debit the suspense account, depending. If you have debited the alternative account, you should be able to credit and so on. Now, a suspense account is also used